This is a Founding Media podcast. Hi, and welcome to another edition of Masters and Founders, the South by Southwest edition here in beautiful Austin, Texas. Today, I have a special guest, Jody Goehring from Hyde Park Ventures. I'm really excited to share some knowledge here with what Jody's going to bring to the table around franchising. So tell us a little bit about what Hyde Park Ventures does and franchise and how that's involved.
Yeah, well, thanks for having me. I'm delighted to be here. It's a great topic and one I'm excited to talk about. Hyde Park Ventures is the third largest U.S.-based Five Guys Burgers and Fries franchisee. We're based up in Boston, Massachusetts, with offices down here in Austin, Texas as well. We started back in 2009. My business partner, Greg Vasey, bought the rights to develop Five Guys in the North Shore of Boston, right when we graduated from business school at University of Chicago. We graduated into quite an economic market for ourselves, and he had the foresight to find a really good brand and a really good market to develop. And over the course of that next 5 or 6 years, he built a nice little portfolio for himself. We were on vacation with our families back in 2015 and decided, let's get together and build something really fun. What do you know how to do? And what do you know how to do? And it turned into well, I know how to run restaurants. And my background previously was in investment banking. And he said, well, you know how to buy things, right? I said, well, I guess so. So why don't we team up and figure out how we can build a really forward-thinking hospitality portfolio on the back of my experience in M&A and technology and his experience in restaurant operations. So fast forward, we did 2 major acquisitions over the course of the next couple of years. And now we sit at 33 units with 25 units in development. And we own from the states of Maine through the state of Rhode Island.
Wow. So I want to back up. That was a lot that we just absorbed there. I want to start back with inception. So why not go and build one restaurant versus going the franchise model?
I would say scale matters, and having a system that can support the franchisee and support the entrepreneur is incredibly important. One of the differences between working within a franchise system and outside of a franchise system is the level of support. So structurally, we pay a % of our sales that we make to the brand as a royalty. We also pay a smaller % of sales as a marketing fee. So basically, we're outsourcing our creative and our brand and really focused on running really tight operations and really creating an optimal experience for the customer and a perfect product. So when we thought about what we wanted to do, whether it be a restaurant or part of a franchise, finding the right franchise was really key for us. And it starts with the right product. Yep. We wanted to make sure you can't build a business, whatever it is, if you don't have your product right. And the same goes in franchising. So we loved the Five Guys product. We loved the burger. We loved the milkshake. We loved the French fries. And so did the consumer. And it's won a lot of awards subsequently. So we started there. So when we found Five Guys, we had a great product. It had a great growth trajectory. And it had a great sales to investment ratio. So we knew when we wanted to start, we were going to build something big, and Greg wanted to build something big. And you need to do it on the back of a really strong platform. So that's how we started.
That makes a lot of sense.
Yeah.
What fears were something that you tackled with when you first decided to let's do this?
Yeah, restaurants are tough. You hear a lot about some restaurants doing phenomenally well and some struggling. And that's a real factor. Over the course of the last couple of years, as we've developed restaurants, we've certainly had a couple that didn't do so well. And those are tough. Those are tough to absorb. So, making sure that the business model itself works, just like anything else. Do the unit economics of each of the stores you build make sense? It costs X to develop. When do I think about getting my money out of it, and how do I think about continuing to pay myself and pay our investors returns is something that's top of mind. So being very insightful and being able to think through and plan and model your investment returns to understand what the investment thesis actually is paramount. So start early, be detailed, be thoughtful, lean on your advisors, and make sure the decisions that you make to build the restaurant or the restaurant portfolio are in the interest of long-term success.
What was the selection process? I mean, I'm just kind of trying to put myself in your shoes and imagine where this was. But what was that selection process like? Okay, I want to start a business in food, and I want to pick the right brand. Yeah. And, there's so many burger brands, and there's so many good burger brands.
Totally.
What was that selection process look like for you guys?
Well, it's interesting. It started before we got into restaurants. It actually started at the franchising level. You make the decision: do I want to build a company on the back of another brand, or do I want to build the brand and build the company? We looked at, in graduating from University of Chicago in 2009, it was a tough market, and we wanted to make sure that when we looked at the investment, it was in relation to what was going on in the rest of the market. So we looked at the public equities, we looked at the S&P, we looked at the Dow, and of course those were going crazy. So we said, well, what were the investment horizons like in the public market going back 10, 15 years? So we looked at the volatility of the public markets, and then we applied a layer of analysis against franchising overall, whether it's a franchising of a hotel or a restaurant or a gym or whatever it is. And we looked at the stability, the inherent stability, and slower but still consistent growth across the franchising market. So we saw the S&P up and down, and we saw a consistent return and growth in the franchising market at about 2 to 3 to 4% a year. So if you look at the chart, you can imagine a slow, steady climb versus the volatility of the public market. So we said there's something here with franchising. Now, we need to figure out what type we do. Do we do restaurants? Do we do hotels? Where's our skill set? Where do we think we can hire the best talent? And we worked our way into Five Guys. We liked fast casual restaurants. We thought if you can run really good restaurants, the margins are really good. We liked fast casual, which is different from a quick service restaurant like a McDonald's or a Subway, and it's different from a full service sit down restaurant. We liked fast casual because it could command a pretty high ticket price, but didn't have onerous labor requirements on the P&L. There wasn't full service. So we took that. And then we looked at what are the growing segments in the market, right? Is it chicken? Is it beef? What are consumers consuming the most of? What do they like? And where are some of the highest growth brands in the country actually playing? And burgers. Burgers, to your point, burgers is very competitive. It's a very saturated market. We found a great little family-owned restaurant chain called Five Guys. They started franchising in 2003. They opened in 1986 for the first time. It's literally a father and his 5 sons, Five Guys.
Nice.
We loved the family nature of that business. It's still owned as a family today. I think it's one of the top largest family-owned businesses in the United States still, with over 1,600 restaurants out there now.
Wow.
We love the fact
1,600 of their own?
of the portfolio. So about 500 are owned by the family, and about 1,100 are franchised. Wow. And we loved, speaking of that, we loved that the brand was also a franchisee. Not just the franchisor, because they share a lot of the pain that the actual franchisee goes through. And when selecting a brand to work with, having one that doesn't just run marketing and brand, it actually runs operations and actually touches the consumer is a really important part.
So they're an owner of the original restaurants, and then they franchise to themselves.
And then they franchise the rest of the country, right?
Wow.
So they own most of the Mid-Atlantic, and then the rest of the country and globally. So now it's in about 12 different countries right now.
That's interesting. I wouldn't have thought
no,
that you didn't franchise to yourself, but that's
exactly. So these are restaurant operators to the core. Okay. They love restaurants. They love consumers. They're in their restaurants. They're in our restaurants. They're very supportive. And that's one of the reasons that we fell in love with the brand the way that we did. Mm-hmm. It's got a great product. We can talk in detail about the sourcing of that product and the sustainable organic nature of where their products come from. Right. We love the investment ratio, which I think is very important in this business. It costs us $500,000 to build a restaurant, and we do about $1.5 million in top line sales. Wow. So it costs us. We can pay ourselves back, and we think about payback periods a lot. So it's about really successful restaurants can pay back in about a year, and otherwise it's about 18 months average by the time we put our 500 in and get our 500 out in terms of EBITDA income.
Yeah, it's really, really
so we
cool.
love that, the quality of the product, and we love the investment profile of the business.
Where does the next 5 to 10 years look like for you guys? Are you going to stay in restaurants? Are you going to go to other types of franchises, or what is Hyde Park doing?
Yeah, so Hyde Park is We're growing. We love our thesis in the U.S. for Five Guys. We fully expect to be in that system long term. We're not a private equity firm. We're an investor and an operator hybrid combination. So we're in it for the long term. We invest alongside some family offices and some high net worth individuals who believe in Hyde Park's vision long term within the Five Guys system. We've recently acquired the rights to develop Five Guys in the Scandinavian market. So we'll be expanding out of a base in Stockholm, Sweden in the coming couple of years, which is really exciting for us and for Hyde Park and for Five Guys. It's the last major European country that's not had a Five Guys yet. So we're very excited about that area of the world. We're also bringing on a partner to help us with hospitality investments, so hotel investments. So you can see Hyde Park and expect Hyde Park to begin to invest more substantially into hotels and resorts over the coming 5 to 10 years. So we're really excited about building a platform that scales, that's focused on hospitality, that's focused on selecting the top partners that we believe and the top franchisors we believe have the longest term value horizon for both our investors and for the consumer.
That's really cool. So as you know, our audience out there is looking to become a master founder themselves, and how do we do these? How do we become successful? How does this work? And one thing we have never talked about is the franchise model, which I thought was really interesting that you guys just only do that. Mm-hmm. And so what advice would you give to someone that's just kind of like kicking the tires, trying to figure out, should I franchise, should I build my own thing? What would the advice be?
Absolutely look at it. It can help with companies and franchisors that have already built strong brands. It takes a level of focus off of that immediate need to create that brand and to create that design motif, right? And then you can focus. It allows you to really focus on your running of the restaurant and the quality of your product. So it's a partnership. Think of it as a partnership. There's tons of different companies out there that start as building a 4, 5, 6 restaurant portfolio and decide that they want to grow by franchising. I think those are excellent to consider. I think you have the experience can be bifurcated to some extent between sort of larger, enduring, lasting brands that have been around for a long time. Mm-hmm. You know, being a McDonald's franchisee is much different than being a franchisee for a startup concept that only has several units of financial unit economics to back itself up with. So I would say franchising can run the gamut. Mm-hmm. When you think about which one you want to get into, think about the brand. Think about the product. Do not forget about the product. Mm-hmm. That's the absolute key. People will not come if the product is not good, and your ability to deliver that product is not perfect. And that level of service and that cleanliness of the restaurant or their hotel or the experience for the consumer is first and foremost. So be very thoughtful as you think about where that specific franchisor is in its timeline, because I think that'll be very indicative of the lasting nature of that business and your business.
That makes a lot of sense. It sounds like, if how they're done with their brand and how do you feel about their brand? Absolutely. I mean, at the very, very core,
absolutely,
is this a brand that I would love to carry on? And have they done well with that? If it's an unknown brand, like it may be carry more risk with it. I'm sure the prices differences between them, but it sounds like, definitely if there's a brand that's already doing a really good job, then kind of go see what that looks like.
And just to add to that, just understanding the philosophy of the founder of that brand. How do they think about growth? How do they think about supporting the franchisee? The greatest brands out there are incredibly supportive of the franchisees, and the franchisees can recognize that. The success of the franchisor is on the success of the franchisee. So ask and poke and prod on questions around long-term philosophy, the way they think about support, the types of support, and really how they're willing to put you first as they think about growth of their own organization. That's
a really interesting point, because one of the things that you hear on the streets as well, franchisers, they have all this control and so on and so forth, and it may not be the best. But I think that's select cases. Obviously, you were talking about your partnership is not that way, because they're very open to listening to the franchisees.
Yes, exactly. And that's one of the reasons. And it was hard. We didn't know that from the beginning, right? But we saw that as we developed our relationship, as we built stores, as we saw the impact that their teams would have literally in the stores with our employees. And that was one of the reasons that we continued to invest in that brand, is because of that level of support. And I'll be quite frank, and we've looked at a lot of systems out there in restaurants and hotels, and Five Guys does a remarkable job in its level of support. So make sure those are questions that you ask early on, and those are reflected in what you pay. You pay a royalty to the brand, and they vary from 2 to 10% depending on the system and in the asset class. But in some cases, it's very, very worth it if you've got a very strong brand that's very supportive.
Well, I think about traditional businesses and the businesses I've run. You're going to spend, if you're doing it right, or if there's a way to say right, but if you are spending money at marketing and partnerships and things, so you're still going to put 25% of your money out doing that anyway. So if you've already got a brand that's established that's kind of helping you, I imagine they come in and kind of help you with employee count and kind of give you guidelines on all that. I mean, what does that process look like?
Yeah, think of it as a massive booklet of how the best in practice restaurant groups do it. And it's everything from how to think about hiring. It's how to think about sourcing. And one of the things the franchise groups do, the franchisors do, is they help you through that process, right? I don't have to go out and figure out where I'm going to get my meat from, where I'm going to get my potatoes from, and then negotiate with one restaurant, right? I'm negotiating with 1,600 restaurants, and the brand is actually doing it for me. So that's one less thing I have to think about. I just need to make sure that I've signed up with the right vendors, and that beef and those potatoes are arriving at the right times on the right days and being unpacked and stored and taken care of as they're prepared for customers. So those are the things that we want to work about. Control that experience within the four walls is what we call it. So there's lots of different things. We've got Five Guys, for example, will also send twice a week. We'll have a customer survey. So we'll have representatives of Five Guys secret shop our restaurants.
Wow.
So there's always these little touch points of interactions to keep us on our toes, to make sure that the cashier greeting is right, to make sure the quality of the food is right, to make sure the cleanliness of the bathrooms is right. That level of detail, especially within food service, is paramount to being successful.
Well, it's really interesting. In a lot of our shows, we've discussed the path of a founder, and there's ups, downs, there's surprises, there's all sorts of things there. It sounds like through franchising, at least some of those, it's almost like a head start. You have a lot of those questions answered for you, and then you get to work and maybe making money quicker. That's
exactly the way that we think about it. So it's and just because you're not tackling necessarily the creative, doesn't mean you're not involved in it. I sit as a voting member of the marketing task force. So of the money the brand does collect, I'm on the board that helps them determine where we spend it.
Oh, nice.
So we sit, and I go to the headquarters twice a year, and we sit down and we review our marketing initiatives and our return on equity investments, and how do we think collectively about brand positioning, and who should we work with from an advertising agency perspective. And so Five Guys, again, does a really good job of bringing its franchisees into the fold, using them, a lot of which the franchisees are very experienced operators and investors from previous lives who've decided to come and spend time with the Five Guys system, and taking advantage of those opportunities has been really forward thinking from Five Guys perspective. And the good franchisors out there bring their franchisee groups into the fold and help them make decisions because they affect everybody.
It sounds like you have a corporate board that comes in with experienced people because they're owners, they bring experience from their previous lives, and they've got really good, valuable input. So
absolutely.
That makes
it's a team of partners.
Sense.
And we look at our fellow franchisees as partners too. We help each other. We help each other with lenders. We help each other with certain local store marketing community initiatives. We're doing some fun things up in New England with the Red Sox, and that's going to involve not just our franchisee group, but others as well. So there's lots to learn from the franchisor and lean on from the franchisor, and there's lots to learn from other sophisticated franchisees in your group. So when you're thinking about franchising, think about the franchisor and then look sideways. Who else is involved in franchising this brand? Are they quality investors? Are they quality operators? That'll tell you a lot about the system you're going to get yourself into.
That's a good piece of advice. When we talked last, where does the person, you had some tools that people can go to as far as starting to do research on franchises. What are some of the trade publications or some of the places that you went to kind of do your first initial funnel.
We love the Franchise Times provides I think it's a monthly or quarterly periodical where they outline top franchisors in certain categories, hotels and gyms and laundry services and anything you can imagine, some of which I did not even know were being franchised, but there are lots of entrepreneurs out there, car washes. That's it breaks it down by size, and it gives you some insight into different types of groups and different types of requirements to be a franchisee. Typically, there's a cash liquidity requirement because they're going to expect that if you're going to buy the rights to develop the state of Massachusetts, you're going to be able to develop and have the capital to develop and have the relationships with lenders to be able to leverage those assets to be able to grow on a specific timeline. So Franchise Times will outline that for you, which has been really helpful for us. There's conferences, depending on if it's a hotel or a restaurant conference, going to sit down with franchisors and have that one-on-one dialogue before you get in. There's a restaurant finance conference in Las Vegas I'm thinking of every fall in November, which is paramount, and which is what we did before we actually started on our catalyst for growth. As we went out to that conference and we listened. And we sat down with brands and we sat down with lenders, and we really got a good feel for where Five Guys ended up wanting to position and wanting to be. And that was just what aligned best with us. But those are two great resources, the RFDC, the Restaurant Finance Conference in Las Vegas in November, and Franchise Times. So that's exactly where I would start.
Very good. Thank you very much for being on the show. It's certainly enlightened me, and I know it enlightens the audience at least to get started, where to get started, and also the experience, the pros and cons to doing something yourself versus going on with a good quality company and a good brand. I think it's very informative for people out there to trying to look at the different ways of being an entrepreneur. There's multiple ways to do
Absolutely.
that. Thank you for being on Masters and Founders. Thanks again, Richards Rainwater and Long Center.